Hello and welcome to Fintech Insider Insights. I'm Kate Moody, Strategy Director here at LMFS. In this episode, we are celebrating US Black History Month by discussing civil inequality in the banking system and shining a light on some of the individuals and organisations trying to change it. Conversations around inclusion are much bigger than just banking. It's a systemic problem which has always existed and still remains a very real issue today. Though civil injustice may not be as outwardly barbaric or as visceral as it inevitably once was, it remains an issue that continues to be hugely damaging to countless individuals and communities around the world. So I'm hoping today to tackle this head on with an expert panel who I'm super excited to kind of learn from. We'll discuss how and why non-white communities are being underserved by traditional banks. We will celebrate some of the work being done already to tackle that, and we'll look at how we can harness fintech for good to drive meaningful change into the future. Firstly, a massive hello to Rodney Williams, co-founder at Solo Funds. Welcome to the show, Rodney. So glad to have you joining us today. Can you tell us a bit about yourself and what you're doing at Solo, please?
Well, number one, it's an absolute pleasure to be here. I'm Rodney Williams, co-founder and president at Solo Funds. Solo is a community finance platform that allows people to lend and borrow from each other. Our stint, we had a shared experience of our friends and family needing access to capital, but we also had friends and family that when they did have capital, there was no way to grow it. So we felt like bringing this community together for something that was mutually beneficial, where one party can get capital when they need it, and then another party can grow the capital they do have. So thanks for having me.
Thank you. Thank you so much for joining us. We're also delighted to welcome Jamilia Grier, founder and CEO at ByteBao and a tech lawyer. Thank you so much for joining us, Jamilia. Again, please could you give us a bit of background about yourself and what you focus on, please?
Sure. And thank you so much for having me on today, Kate. So as you mentioned, I'm a technology and data lawyer. I'm based in Dubai, but I'm from the US. And I'm also the founder and CEO of ByteBao, which is a Web3 legal ecosystem. And our whole mission is to protect and promote Web3 technology for social good. And we do that through consulting and through content and also through bringing about community.
Awesome stuff. Well, again, thank you for giving up your time to come and share your perspectives with us. Looking forward to getting your take as we work through today. And finally, joining us this week is Asya Bradley, founder and angel investor. Hello, welcome to the show. Again, please introduce yourself to our listeners and let them know a bit about you.
Thank you, Kate. Really pumped to be sharing this stage here with Jamilia and Rodney, two amazing powerhouses that clearly have been at this for a long time. I'm a founder of a company called Kinley, which was a neobank focused on Black America. It was just recently acquired by Greenwood, another incredible financial institution focused on Black America. I'm also an angel investor, and I focus my investments on your typically underrepresented founders. So think, any minority class that you would see out there, but also think about the intersectionality of diversity as well.
Fantastic. Well, yeah, as I said at the top, really looking forward to kind of learning from all three of you and kind of hearing about the work that you're doing. So thanks for joining and let's dive in. So I suppose to start us off, it's hard to fully appreciate the amazing work that you're all doing without first understanding the big picture, because some people might be listening to this show thinking, civil rights was something that got sorted in the 60s. So Rodney, I'll come to you first. I think obviously we wouldn't be recording this episode full stop if we were in a fully equal society. So, what is the equality gap that exists and how big is it?
Well, I think according to, if we think about the wealth gap, and I know there was a recent Brookings study. I mean, it's larger than it's ever been, at least in our near history and our young history. And so, of course, there's an inequality gap. And I think when you think about that gap as it relates to the finances, and that's like someone's livelihood, whether that's aspirational, meaning their ability to grow their wealth or the ability to accomplish the dreams that they need to, when you have inequality at the finance level or the class level, it's always going to be a major problem for all of us. And I think that's currently what we face, and that's currently what we see. And I can't tell you how many stories or problems. I think being a fintech founder over the past 5+ years, the biggest challenge that I've seen is a lot of the initiatives and the resources that have been designed to address that wealth gap haven't worked. And that's just the facts. It's actually gotten worse. And when you think about, well, maybe innovation can do it. Well, but when you look at this administration and you look at the current CFPB and the current regulatory environment and the current VC environment, all of my founders that I knew 3, 4 years ago, that were 5 years ago, that were focused on financial inclusion and bringing innovative products that are trying to close that wealth gap, they're no longer here. They've been wiped out by the current administration, by the current regulatory environment, by the current Silicon Valley environment. They've been currently wiped out. There has been nothing helpful here. And so that, to me, there's no shock that it's worse. We all know that we cannot count on the large banks and the large credit card companies to create products for everyone, create mortgages for everyone. That is a fact. They won't, they will not, and they never have. They're not incentivized to do so. The only way that we're going to ever try to address this gap is by finding founders who have this kind of connected purpose to drive some change with new types of products, and they need to be supported. And I don't know when that's going to happen.
Asya, I saw a lot of head nodding there as Rodney was talking. Do you recognize that picture? Like how do you see the problem?
Yeah, I mean, so I'll take it a step back to even just starting with the definition of financial inclusion, right? World Bank considers financial inclusion as something that individuals and businesses have to have access to useful and affordable financial products and services that meet their needs. But they're really just looking at ability to transact, make payments, a savings account, credit, insurance, right? And so that's what they say. And then you've got McKinsey that is talking about, financial inclusion being when everyone can access financial services. So they take it a little bit one step further. So accessing those financial services, but being able to build wealth, right? And I think that's a really key distinction. I'll take it even a step further and say, I'm not fighting for financial inclusion anymore. I'm fighting against financial exclusion, right? And I think that's what we're seeing a lot of in America. And so, the World Bank, for example, has done a lot of work around financial inclusion globally. And so even though we're seeing an improvement, so in terms of like the overall global wealth and income gap has narrowed since the 1980s, the inequality has actually increased within the more advanced countries. So like America. So you're seeing that disparity actually growing here. So as of like 2016, the average Black American family had only about 1/10 the wealth of the average white American family. 1/10, right? And so it's not talking about just, do we, as a Black community have access? Are we being included? No, we're actually being actively excluded.
No, I think that's critical, yeah, to kind of ground us in those definitions. Jamilia, obviously you work outside of the US. You kind of have maybe a slightly more international perspective. Are there any other challenges or particular problems that you've observed or you've experienced?
Well, I think it's safe to start out and say that discrimination and bias exists all over this world for people of different groups and for different reasons. But what I've experienced, having lived both in the US and outside of the US, is that financial exclusion, as Asya mentioned, is real for the US. But outside of the US, there are less of those systems and policies and deep-rooted traditions that tend to promote and perpetuate the financial exclusion. So as a Black American that's living abroad, in terms of raising capital, in terms of having equal access to certain financial products, it's just more accessible. And so that's why I'm always promoting having a global mindset and really looking outside of the US, in addition to looking within the US, but keeping that open mind to see what opportunities exist outside the US borders.
And Rodney, obviously you've focused at Solo on that kind of financing or that access to credit. So I wonder, could you give us a bit of an insight into the problems, particularly within the lending space? Because obviously there's issues across the financial spectrum, but I'm keen to kind of break down some specific areas in particular. So what are the main problems or challenges that I suppose you are seeking to solve through Solo?
Yeah, as we have progressed as a company, there's like a couple things that I tend to focus on, and I will tell you probably the most important thing, and I'll summarize both of those things into one, is that I do think it may be much more about class, and what I'm really referring to is that our financial system, our lending system across the world actually tends to try to focus on building products, financial products for people who have money, right? And then they don't build products for people who don't have money. So if there's any in other cultures where they believe you do have money, you're now in that class of the financial system. In the US, we tend to exclude a large group of Americans because they do have limited money, right? And what that means is, for example, from an investment bank standpoint, investment banks across the US have minimum wealth thresholds where they won't manage your money, right? Because they deem you do not have enough to manage, right? So that means you will never have access to the wealth building epic center of our financial system. If you bank at a large retail bank in the United States, Bank of America or Wells Fargo, you name it, you have to have minimum deposits. The higher your minimum deposits, the more services you get, the more things that you get to encourage wealth building, and the list goes on. So there's no difference to when you get to like credit and what happens in America. What I like to say is that, like, I'm talking about the vast Americans. Most Americans, working class Americans, are working. They're gainfully employed, but they have inconsistent cash flow and inconsistent income. They may not be a salaried employee. They could be an hourly employee, but they also are, highly ambitious and aspirational. That means they could be a waitress on certain parts of the week. They could also drive Uber, and they may be a DJ and a graphic designer. That is what the American consumer really looks like across at scale. And that inconsistency, most companies exploit. So that's late fees, that's junk fees, that's all of the things that you may penalize someone for. But in reality, we should be providing that group capital so that they can smooth out the inconsistencies, so they can manage the emergency, or the child may get sick and I no longer can go to work and for those hours. And that's called access to capital, right? Our platform is taking an approach of providing that access to capital from other people that are very similar. What we also figured out about this same group of Americans is that there's in different seasons of their life, they will have savings. It's not a lot. Maybe it's a few thousand, maybe it's a couple 10,000. But they're not growing that money. So if I'm a dad and I have $5,000 sitting in my account, roughly 3 years later, I still just have $5,000 sitting in my account. That same group is now lending, and that $5,000 is creating yield, 10% per year, 20% per year. And all of a sudden, they're now growing the money they have so that when they have an emergency, they now can get themselves out of it. That's been our approach. We have largely grown with very, very limited venture capital, not because of some fancy pitch or nifty marketing. It's just people helping people. It's working. And the vast majority of Americans within a 12-month time period will need a product like this. And I like to think of it, it's one of the few products that are actually designed for like working class, real Americans, people who actually need a product that actually serves them.
Yeah, absolutely. Asya, I want to get your perspective on something Rodney said earlier about, the fact that the current ecosystem doesn't support founders, but we've seen some founders from underserved communities kind of struggle to survive. Obviously, as an investor, we're keen to get your perspective. Like, do you think there's a real issue in that part of financial services too?
There is absolutely. I mean, it's a fact that funding to the Black founder community has dropped. It's actually dropped post George Floyd. So there was a bit of an uptick immediately following the murder of George Floyd. And then I think in the last year or so, it's dropped again. So the reports, I don't know the numbers offhand, but I read a report last year of the state of capital funding being provided to startup founders, and it has dropped. It's dropped for women. It has dropped for Latin founders as well. So it's just overall funding for, you know, typically underfunded founders has dropped even further. So it's gotten worse. But I did want to pick up on something that Rodney was talking about in terms of, access to capital and how Americans, are not really even able to make some of the basic expenses. So like a recent McKinsey survey, they did a survey of 25,000 Americans and they found that only half of them would be able to cover expenses for more than 2 months if they lost their job. And that's why, what Solo does is actually, you know, find that bridge, that moment where if people are in that tight spot, they can reach out to their community. And it's something that Black and Brown communities have been naturally doing. I'm from Pakistan. That's where I was born. And I've lived in a lot of Eastern Southern countries where this just became a natural thing. The community took care of each other. And if you look at also our major financial institutions today, they actually grew out of that sense of community. So when I look at Solo, I see a future Goldman Sachs, right? Goldman Sachs came out of the whole idea of everybody, when Jewish people moved to the US, there was a lot of anti-Semitism. Nobody wanted to work with the Jews. Nobody wanted to provide lending opportunities or anything. They didn't want to bank them. And so they were like, fine, we're just going to work with ourselves. We'll work amongst ourselves. And they did. And they created this incredible institution. And that's, this is sort of what we're seeing. And in all of these communities, you have that like Isusu system, in Africa, you have the committee, the kiddie bank in South Asian communities. So this is just making it more of an safe, organized way where the community can help each other. But there was some promising stuff. I don't know if Jamilia and Rodney, you saw this in terms of the CFPB unveiled a plan that Joe Biden had about overdraft fees and dropping them to as little as $3. Because that's a whole other thing that I think we can talk about in terms of it really is the most, the people that can least afford to pay these really crazy high fees of sometimes $35 that they just do not have. Those are the folks that are being hit, right, with these overdraft fees.
Yeah, no, I think absolutely can kind of see that those most punitive parts of the kind of financial system are definitely like over skewing towards these types of communities. I think the point you make around communities is really interesting because that was precisely what I was trying to work out in my own head, like prior to recording, was what we've seen in financial services as a whole with the rise of digital is, everything moving into the online space, people having, in theory, access to, instant, convenient, potentially kind of, safer online services, but removing some of these physical touch points. These we've seen in the US in particular, the challenges that community and smaller banks have faced. People are actually moving away from physical branches or community-based branch banking, onto online platforms. And I was trying to work out in my head, like, has this helped or has this actually made things harder? Jamilia, I don't know. What do you think? Has the rise of digital banking helped these communities or created additional obstacles?
Well, I think digital banking, but particularly Web3 and cryptocurrencies have opened a whole new door of opportunities for people to understand about how money can flow across borders, how it can be exchanged with less fees across borders, particularly for groups and populations that need to send money back home to family that may be located in other countries. And so we've seen that in terms of this decentralization, meaning that data is not owned by one particular company. It's decentralized. It's on a blockchain or a decentralized ledger where everyone can have access to it. And that opens up opportunities for people. But I still think it all goes back to the premise of, are we really looking at our full potential? A few years ago, there was a movement called Blaxit, and it was a movement about a bunch of Black Americans and hundreds of Black Americans really moving outside of the US to pursue greater financial freedom and greater financial wealth abroad. And I'm continuing to see that pattern, but I'm also seeing that coupled with Web3 and decentralization has brought some very interesting trends of Black Americans creating opportunities for themselves abroad, but also other people from the African diaspora continuing to migrate and to move to other countries and create opportunities for themselves. So it is interesting how digital currency can really help, but I think it really has to be coupled with this change in mindset, is that we are all interconnected, and really you are just limited by the mindset that you have.
Yeah, absolutely. And obviously we're here recording this show to mark Black History Month. You are all sort of important individuals, representing your communities. Like, what does Black History Month mean to you and your companies? Like, what do you kind of want to use this month to achieve, Rodney?
Yeah, I think for us, we just want to continue to do what we do and do our best. For a Black founder, it's one part, we're just happy to be here and be able to provide a solution that we believe is the right solution. And we got to continue to advocate, and we have to continue to promote, and we got to continue to spread the information that we have about serving consumers that we need to serve. And I think that's going to be our goal, and that's just what's going to continue. Unfortunately, there's so many even new forces against us at this right now, right? And I just think we're super aware. We're super aware of that. But let's celebrate some of the good things. I'm extremely happy that we got the ruling regarding the junk fees. I want to challenge the administration to figure out how to support these founders that are marginalized. I want to challenge them that fintech is not the enemy. Web3, crypto, um, uh, solo funds, right? That we need to figure out how to celebrate and tell these stories during this month and during this time period. And I know it's very easy to think that everything is about race. I like to try to find the human insight to try to connect to people. And at the end of the day, whether I'm Black or white, if I'm cash poor, I have the same problem, right? And that means I can't afford basic necessities, and I don't have the things that I need to thrive. And I believe in that American dream, that group together, we need more resources so that we can thrive together. So it's not a Black problem; it's an American problem.
I think you're right, Rodney, in highlighting, the lower income problem. I read somewhere, I think it was Consumer Reports, that 8% of bank customers, and most of them are lower income, they account for nearly 75% of the revenue that banks generate from overdraft fees. And that revenue is roughly $9 billion a year, right? So this is lower income folks are paying banks $9 billion a year. Banks have collected about $280 billion, right? So $280 billion in overdraft fees in the last 20 years, according to CFPB estimates. That's a lot of money that 8% of the population of, that consist of mostly lower income folks have been paying. And so it's just a lot. It's a lot to be putting on these lower income communities. Having said that, Rodney, it is still, let's be very, very honest about this. The lower income communities generally are a majority Black and brown, right? It's the immigrants here. It's a lot of the folks that are marginalized. It is, of course, that the communities of rural America where you do have a lot of white Americans. But I don't think we should try to kumbaya it too much, right? Because it is still very heavily a Black problem as well, in that Black households, nearly half of Black households are underbanked. Black Americans are also more likely to be served subprime financial products. And that's like loans with higher interest rates that increase over time, which make it harder to pay off those loans. So I think it's fair to say it's a lower income issue, but also acknowledging that a large number of our communities fall under that lower income category.
Absolutely. Okay, I think we've done a really good job at outlining the myriad of problems in this space. So I'm going to heed Rodney's request, and we're going to take a quick pause here, and then we're going to put our celebratory optimistic hats on and look at what's already being done and what more we think can be done in the future. So don't go anywhere. We'll be right back. Welcome back to Fintech Insider Insights, where we are looking at civil inequality, particularly around access to financial services. All of my guests today are playing their part in trying to fight this and change the fabric of financial services, which, as you know, is what we at LMFS are all about. So how do we solve this problem? Jamilia, as you alluded to, you are heavily focused on the Web3 space. What's kind of the key things that you see as the optimism for the future? Like what's keeping you optimistic about how we can change some of these problems that we've been talking about?
I think some of the systemic problems that we've been talking about, such as subprime mortgage rates and bank fees, all of these things are reduced or minimalized with the introduction of cryptocurrency and mass adoption. And one of the barriers that we're hoping to see sort of subside over this year and next year is this onboarding or education into Web3. And if you look at the Web3 space right now, it is very heavily male. You don't see a lot of underrepresented groups in Web3 right now. And so really what we're looking to do is to continue to educate and continue to introduce this sort of content to people so they can actually know what's happening and what the advantages are of learning this now. It's going to be in your iPhone. It's going to be part of your day-to-day life. There really is no running away from cryptocurrency. And we saw a couple of weeks ago when the SEC approved the Bitcoin ETF, we see that the regulators are also moving closer to really accepting cryptocurrency in the US. And other countries have moved a bit past that, particularly in Singapore and in Dubai, and other countries have really created regulatory frameworks to embrace innovation in Web3. And the US is somewhat behind in that. But in terms of people such as myself or other underrepresented groups in learning about it, that's going to be key. And that's what I'm really optimistic about for this year.
Rodney, what do you want to celebrate or call out? Who's helping to make positive moves in this space? I'm guessing, obviously, solo, but is there anyone else that you want to shine a spotlight on who's doing great stuff?
Oh, listen, I firmly believe we're the largest Black-led consumer fintech ever in the United States. So I think I have a right and a duty to say that Solo is doing the good work. So far in our existence, we've enabled over $275 million of access of capital to underserved Americans. We've saved them over $30 million in fees. And our lenders have increased their wealth by $20 million collectively. These are regular people. This is good work, the story that's working. Our goal is to continue to push that through whatever opposition may exist. We got to educate regulators. I look forward to regulators doing the work to understand the progress that's being made and make the right choice. That's the same message to politicians, the people that are paid to do the good work, and I'm looking forward to that. I would also tell you that our pursuit doesn't stop with just the United States. We're going to launch into our first global international market, and continue to do the good work. We believe here this is our life's mission and our purpose, and that's what I'm going to continue to look forward to.
No, that's awesome. Are you allowed to tell us where, or is it still top secret?
Oh yeah, no, we've talked about it. We're gonna launch on the continent of Africa. We're gonna launch first in Nigeria. That's gonna be the first. We have plans to enter Africa as a whole, Southeast Asia, as well as Latin America. So South America more so specifically, but a lot of good work and a lot of challenges to do it, but we're gonna go out and do it.
That's awesome. Super exciting. Asya, what are you excited about? Like, what do you kind of see as like the the green shoots of optimism or potential to kind of fix some of the problems we were talking about before?
I mean, super excited about what Rodney and also what Jamilia are building. I think it's amazing, and you know, when I was at our very first like BaaS provider in the world that we created at Synapse, it was really exciting because that's where I met folks like Rodney, building solo funds, and I'm starting to see a lot of these companies um, that at the time were mere seeds, right? It was like a seed, it was a thought, and seeing it kind of progress from that to where these companies are now, it's super exciting. I'm I Isuzu, for example, is one of my portcos. And I met them when they were also at their idea stage, and now they are a unicorn company. And so it's amazing to see the progress of these really just tenacious founders that have gotten here without all of the incredible support of the VC community, right? They've really just made it because the product is good, right? It's a really good product. I think that really excites me. What also excites me though is that, I think that there's real money to be made by banking everybody. If America could address this racial wealth gap, it could lead to an additional 5% of GDP growth in the United States. I mean, that is a lot of great incentive for the politicians, for the financial institutions to kind of think about. For the financial institutions specifically, if we had Black Americans, if we gave Black Americans access to the same financial products of white Americans, these financial institutions could be getting $2 billion annually in additional revenue, right? And that's amazing. You could have about $60 billion in additional revenue from Black customers every year if we had full wealth parity between Black and white Americans. So when you look at all of that stuff, it's like the incentive is there. And I think a lot of it is just highlighting that in terms of what could America gain if we did this right thing. And if that's not going to happen at that institutional level, it's super exciting to see what's happening at the founder level and with tech being able to enable this. And Jamilia, I'm really excited to see you working in the Web3 space because, like you said, it's looking very white right now and it's looking very male right now. And that's not representative of the world that we live in. So we need more people, like Rodney and like Jamilia building in these spaces.
For sure. And I suppose I'm keen to kind of get your thoughts on, do you think that opportunity will be seized by the institutions, by the banks? Will they ever be able to kind of really address kind of this opportunity that you've outlined, or do you really see this as a fintech opportunity?
So quite honestly, I've always been a supporter of bank and fintech partnerships. I've had incredible relationships with bank partners. I've seen where bank VCs can really be a very supportive arm behind the fintech community, and I'm still very hopeful of that. And I see that with the bank VC arms really going out there and looking for the technologies that still meet the compliance needs that the bank needs, right? So I think I'm still very, very hopeful. I think it's still happening. It's just not happening at the speed or with the same visibility. I think a lot of it comes down to visibility. We may not see it as much, but it is there. And you look at what did PayPal just invest in? I can't remember. It was also like a crypto thing. Jamilia, you might know about that, but I saw the announcement just like yesterday. But that was pretty exciting too to see. Like, there's also a fintech supporting like a larger fintech, kind of coming down and pulling up other fintechs. So I am seeing a lot of awesome collaborations in the space, and even just looking at Greenwood acquiring Kinley, right? That type of collaboration is super exciting, and I think it is going to happen at the bank, major institutional spaces, as well as like amongst fintechs.
And Jamilia, I suppose just to build on Asya's point, obviously, it is great to see the whole community start in hopefully being better represented. How heavy does that weigh on you? Like, do you kind of take that role very like how does that sit on your shoulders? I feel like it must be quite a big burden to carry.
Well, I feel as though just being present and doing the work that I do is enough. And, ByteBao is really focused on supporting Web3 startups that are for social good. They have a social mission. We've worked with startups that are, for economic and environmental conservation, such as turtle conservation. And we've worked for startups that are looking at things like real world asset tokenization and making ownership of homes more affordable for your everyday person. And so it really is about going beyond that hype of meme coins and altcoins and really looking to what is the social impact that your project can actually have. And we have seen a race kind of as Asya had, as you've mentioned, is that you have your small startups that are looking to fund themselves through NFT launches and things of that nature for their project. But you also have the big boys that are looking to kind of come in, whether it's PayPal or Visa or other traditional companies that are working in the financial space. And so it will be interesting to see. I personally would like to see a lot more of these mission-based companies come forward, which are really just a mission with a company, to come forward and to put their tech first and to put their mission first, so we can see that grow a little bit before we get back to the old ways of centralization, because this is really all about leveling the playing field and making sure that there is enough wealth to go around, enough opportunity to go around as well.
And obviously, we focused quite a lot in our discussion so far on the US and some of both like the problems in the US, but also companies like Solo that are making great strides. I just wondered, from your perspective, are there any particular fintechs or financial partners that you see outside of the US that are also, for our listeners, they should go check them out or they should go look at the work they're doing? Who would you like to give a spotlight to?
Sure. I'm a strong supporter of a lot of these women in tech organizations that are global. So Women in Tech is one. Dubai Women's Business Council works heavily in the tech space as well and supporting women founders. And what I'm seeing in this side of the world is really just a lot of government-led initiatives to support women. And rightfully so, it should be done. But it's definitely more present. And I would just give a shout out to them that if any women are looking to start up abroad and they have a background in tech or looking to explore fintech, Web3, anything, make sure you look into those resources first.
Good shout. Good shout. I don't want to kind of get us into like politics per se, but Jamilia sort of alluded to there being some markets where there are political positives. How big a factor will certain political events this year be, Rodney, do you think, on the sort of success or otherwise of organizations that are trying to address these types of problems?
Um, well, I think there's, transparently, I mean, they're not just looking at the United States. There's markets around the world that I think their administration has done better to promote some of the necessary financial products that are more inclusive or more innovative, for the main purpose. I love countries which it didn't really have the foundation of the bureaucracy, and they were able to kind of reinvent the financial technology that they would want to exist. My favorite case study is India, right? And the work that I have learned with Mohammed Yunus. So like, I look at Nigeria as the next version of that, where a lot of the bureaucracy, there's bureaucracy there, but in terms of the financial system, they're going to use technology to accelerate themselves. And I think that's an opportunity. Our administration, and we're going into a election year, and we look forward to it. I think at the end of the day, we're going to continue to be as hopeful as we're always am in terms of the group that will win is the group that the American public wants. And I think it's always a result of the past couple years that pushes a candidate to the top. I just hope that whoever is a part or whatever administration lives, we figure out how to promote technology. And and promote innovation and promote the founders who are fixing real problems. And my goal, my hope is that if we're talking about real problems, then we have to talk about racial problems. And it's not because you may agree that there's a racial problem, but that economically it's a problem. Back to the points that we made on this call. There's a lot of economic growth for the United States by just treating people the right way.
For sure. Asya, if we were going to come back next year and we get to Black History Month again and we record this show again, like, what's the main thing that you would have liked to have seen move forwards or change in the next 12 months?
I mean, absolutely want to see a decrease in that, racial wealth disparity. That would be amazing. I would love to see America's GDP grow. I'm an immigrant to the United States. I love being here. I'm a true believer in the American dream. And I see people just working so hard to get it. And I just love celebrating those kind of wins. Like I want to see solo funds become a unicorn. I want to see Jamilia's name, all over the press around the world. I want to see this. I want to see podcasts like this where we start listing out, hey, what did we achieve last year? Let's celebrate those. But yeah, I mean, I'm forever hopeful. I think that there is a lot of room for growth, but that means that there are a lot of opportunities, and there are a lot of opportunities for partnership. And I would say, I think that really needs to be the focus is, let's not be adversarial, between like what do fintechs do versus what do financial institutions not do for us, but rather find that common ground, learn from each other. There's a lot that financial institutions can learn from the tech community, and there's so much that the tech community needs to learn in terms of compliance, in terms of, regulations, in terms of safety, ultimately, right, for our consumers of fintechs, that we can only learn from the banks because they've been doing this already for hundreds of years. So I think just, dropping that hubris on all sides and saying, okay, let's figure this out together because the common goal is a stronger America and a stronger world.
Sounds like a busy year. Fingers crossed. I think on that note, I think that wraps up today's discussion. Could very happily chat about this for hours, but you guys are all busy doing very important things, so keen to let you get back to your days. Thank you so much for joining me. Where can people find out more about you and what you're working on, Jamilia?
You can find out more about me on LinkedIn. I'm there a lot and talking about the regulatory updates and essentially what's happening in the world of Web3, and then also on Barely Legal in Web3, the podcast that we host. And you can find out more about ByteBao at bytebao.io.
Awesome. Rodney?
Well, Rodney B. Williams on all social handles, also Solo Funds at solofunds.com. And again, really appreciate Fintech Insider for having this conversation and getting this incredible group together. So thank you.
No, thank you for taking the time and congratulations to you and the team for everything you've built to date and continue to build. So kudos to you all. Asya, what about you? Where can people find out more about you?
Yeah, LinkedIn is great. Please do feel free to connect with me. And also on Twitter, my handle is Ms. Asya, so MSASYA. I am one of those weirdos that actually responds to messages. And my DMs are open all the time.
Awesome. And you can find me on LinkedIn as well, Kate Moody, or you can drop me an email, kate@learnfest.com. Thank you for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others to find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts@11fs.com. Thank you very much. Goodbye.